Welcome back to Market Movers, the podcast that keeps you ahead of the curve in the world of stocks, trading, and everything finance related. I'm FX Videos, and today, we're diving into the key developments from this week's US stock market and what you need to watch for heading into next week. So grab your coffee, notebook, or trading app, because this episode is packed with insights that could shape your next move. This week was anything but ordinary on Wall Street. Let's start with the big headlines. The Dow Jones Industrial Average managed a modest gain of 1.2%, while the S&P 500 saw a dip of 0.4%. The Nasdaq, on the other hand, took the hardest hit, falling 1.8%. Why? Two words: tech earnings. Big tech names like Microsoft and Alphabet delivered mixed results. Microsoft exceeded expectations with robust growth in its cloud segment, but Alphabet spooked investors with weaker-than-expected ad revenue growth. Both stocks experienced a roller coaster week, with Alphabet closing down 3% and Microsoft managing to hold steady. In the energy sector, crude oil prices surged past $85 per barrel after a surprise OPEC+ statement hinted at potential production cuts. This sent energy stocks, including ExxonMobil and Chevron, into rally mode, offsetting some of the losses in tech-heavy indexes. And let's not forget the Federal Reserve. Chair Jerome Powell made headlines on Thursday by reiterating the Fed's commitment to taming inflation, even as job numbers came in hotter than expected. The central bank left interest rates unchanged but hinted that more hikes could be on the table if inflationary pressures persist. Now, let's break down the stocks and sectors that stood out, whether for good or bad reasons. On the winning side, healthcare stocks saw significant inflows after several biotech companies released positive trial data. Moderna led the charge with a 5% jump, thanks to a promising update on its next-generation vaccine technology. Meanwhile, Tesla was one of the week's most talked-about losers. The stock dropped nearly 7% after analysts downgraded it over concerns about slowing EV demand and increasing competition, particularly from Chinese automakers. Financials were a mixed bag. On one hand, JPMorgan Chase continued to impress with strong earnings, but regional banks, including First Republic Bank, struggled under pressure from rising interest rates. Before we move on to next week's forecast, let's zoom out for a moment. Corporate earnings are driving much of the market narrative right now, but the broader picture includes geopolitical tensions, inflationary trends, and consumer behavior as we head into 2025. Retail sales showed some resilience this week, suggesting the American consumer isn't pulling back as much as expected, yet. However, supply chain disruptions in Asia, coupled with ongoing labor strikes in the U.S. could impact the outlook for retail and manufacturing sectors. Investors are also watching Washington closely as debt ceiling debates heat up again, with potential implications for the bond market. So, what's ahead? Let's talk about next week's game plan. First, keep an eye on the Federal Open Market Committee's minutes, set to release midweek. These could provide more clues on the Fed's interest rate trajectory. Second, Apple and Amazon are both scheduled to report earnings. These reports are critical, as they will offer insights into the tech sector's health and consumer spending trends. Analysts are particularly focused on Apple's iPhone sales in China and Amazon's performance during the holiday season. Third, Friday's jobs report is going to be huge. Economists are predicting the U.S. added around 200,000 jobs in January, but anything above or below that range could send shockwaves through the market. On the sector level, keep watching energy stocks. With crude oil prices rising, companies like Exxon and Chevron could continue their upward momentum. However, don't underestimate the potential for profit-taking after this week's rally. Lastly, small-cap stocks may be worth another look. The Russell 2000 has been underperforming recently, but some analysts believe we're nearing a bottom, making this a potential opportunity for value hunters. Alright, here are a few tips to navigate the coming week. Stay diversified. With so much sector rotation happening, it's a good time to ensure your portfolio isn't overly concentrated in one area. Watch volatility indicators. the VIX, often called the fear index, has been inching higher. If it spikes, it could signal more turbulence ahead. Focus on fundamentals, don't get caught chasing headlines. Always go back to the numbers, earnings reports, balance sheets, and forward guidance. Set alerts, whether you're tracking Apple, Amazon, or the S&P 500, having real-time alerts can help you act quickly on news. And that's a wrap for this week's episode of Market Movers. Thanks for tuning in, and remember, the market is always changing, but knowledge is your greatest asset. If you found this episode helpful, don't forget to subscribe and share it with fellow traders and investors. I'll see you next week with another deep dive into the market's movers and shakers. Until then, stay informed, stay disciplined, and as always, happy trading.